Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 22nd, 2009. Well, we're seeing a volatile market today, guys, and it's not Whipsaw Wednesday, which we coined for Options X, but Wednesdays of late have just been wild days, and we're seeing that again today. Now, I'm going to discuss what went on this morning, what went on midday, and why are we selling off now, possibly. All right, all in all, folks, an interesting day. Very, very interesting. We had Morgan Stanley earnings start out. Yesterday after hours, we had Yahoo earnings, which were good. AMD were not that great, but Yahoo for technology was pretty good. You are seeing Apple trading up into earnings after the bell today. It's another big technology company that will be reporting. Now, the big things about today are this. Morgan Stanley reported this morning and absolutely got crushed. Their earnings were not pretty. It did not really make a profit, ultimately getting slammed down. Morgan trading lower right now at $1.61 to the downside. Now, it's not a huge loss, but about 5-6% across the board on the downside on Morgan Stanley. However, the market gapped lower. Geithner started to speak right around 9 to 9:30. The market started to catch a bid. Right around that 9:30, 9:40 level, we started to rally up. And the rally was intense, folks. Light volume rally. The financials were being led by Goldman Sachs. Goldman Sachs ripped higher, and I mean ripped, folks. I'm going to show you Goldman Sachs chart right now. Look at this move. Gap down and just blast off. The market was actually pausing here, and I want to show you the spiders chart again. Notice how it had a nice green candle, then a red candle, and then the green candle again. So you're really trading sideways on the spiders, the SPY. But look at Goldman Sachs. Blast off, pause, and then blast. And this really started the market off on a run, a beautiful move to the upside as the market's just got an overall bid led again by financials. Now, Morgan Stanley was left in the dust, no doubt about it, but the other ones, Wells Fargo, Bank of America was positive, Citigroup was positive, JP Morgan was ripping up. Huge moves. And I just want to touch on something here, folks. Just watch this pattern later today on Goldman. Alright, I happen to catch this pattern just as I'm doing this video. That's why I love doing these videos live for you guys, as it's a little after 1 p.m. Eastern time here, because I see things in it that I can talk about and give you guys a heads up. Now, before I tell you about what I'm seeing in this pattern, some of you that have been with us or premium subscribers in the Research Center may know, I just want to make a quick announcement. This Saturday, we're doing our next webinar series, our ideology and myth, our kind of overall mythology and kind of our ideology on trading. Alright, that's so important. For those of you that want to get into this hardcore technicals and want to be able to see things, this is what you need to do. You need to take the webinar. You either need to take the Research Center, join the Research Center as one of our premium subscribers. Take the webinar this Saturday. Find it on our website under Education, Seminars, and Webinars. Fantastic. My partner, Chief Market Strategist Nick, who basically taught me everything I know on technicals, will be teaching it, folks. Fantastic. Okay, next but not least, the premium service, guys. You guys know the Research Center by now. Fantastic. And also the chat room. Chat room is just a great place to be. Again, we profited on an FAZ trade this morning that we had picked up at the close on the gap down. We unloaded, and what a beautiful trade on that one on the FAZ. About the 10th time we've been in and out of the FAZ over the last couple weeks for profits. Absolutely fantastic, folks. Okay, next but not least, I told you I saw a pattern here. Look at this pattern developing, and this is something you just need to watch. It doesn't mean it's going to play out yet. It's a preliminary pattern, but you need to watch it. Possible head and shoulder pattern developing here on Goldman. Your neckline breakdown is going to be right here. All right, here's your head, shoulder, This comes down here and breaks down. You'll get first support right here on Goldman. Second support will be right here on Goldman Sachs. So watch those levels on that chart. Now let's go back to the spiders chart. I want to talk a little bit about this. You don't have the same pattern on the spiders here. There's not a head and shoulder pattern development here. You do have an in spirit of bear flag formation though, with inside bars, green bars here. But as soon as if we take out this yellow line, then that would be negated. Okay, folks. So just be aware of it. You need your inside bars here. Still could be a bearish pattern overall, but not nearly as successful as if they were all inside bars like they are now. So we'll continue to watch that again. And just note here first, the spiders, again, gapping lower. Morgan Stanley reporting earnings. Not pretty earnings, folks. Not pretty at all. But as soon as Goldman Sachs caught a bid today, the markets were off to the races to the upside. It's been a hard push up. Look at this spike on the spiders. From this candle all the way up. Basically from $84 on the spiders almost to $86. A $2 move on the spiders, which is a huge move for an intraday period like this. Squeezing all the way up. And I just want to show you a couple different levels that you went to. You burst through this trend line. All these trend lines in these different colors are all key, and they're there for a reason, folks. I want to stress that. Notice how this first candle kept on banging on this kind of beige type trend line. This one's a key one. Why? Because it's yesterday's high print right here in pivot. It actually goes back further to be a key pivot as well. But that's what you were hitting on initially. When you broke above that, it was clear sailing up until the 50 moving average and this bluish trend line. Okay, this one right here. Now, what did that coincide with? Yesterday's high of the day and the moving average. So that's very, very important. In fact, that's the 200 moving average there, even better, even stronger right here, the 200. And you paused that candle, but you ultimately broke through. Where did you go? The next candle pierced the yellow trend line, which, again, I can show you back where that's coming from. Right here, the open on the big gap down right here, that's your yellow trend line. And we'll go back to current times here. And then the market continued up even past that, making a little push, then stalling out. What pattern is this? Bullish flag pattern, all inside bars, right back to the yellow support line now. Remember, resistance, which is right here, once you break above it, now it's support. So ultimately, you come on back into that. That's all a bit of bullish in spirit of bull flag. What does that mean? More than likely, as long as you don't take out the low of that candle, you're going to go higher. The market sure as heck does go higher. Ultimately to this pink trend line, which is the big, big one of the day. And I'm going to show you where I got that one from. All right, so let's take a look all the way back here. We have to go back even further. Look at this. There's your pivot from down here. So the low of the day on the 17th, giving you that line. And exactly where do we go into? That line. So I'm showing you these pivot lines and these trend lines because this is what you have to do. You put these patterns together, these time patterns, these pivots, these trend line analysis tools, price pattern, you name it, you will become so much purer trader. It's all about pure, taking out the emotion. If those of us out there that are listening to this video know about the discipline, the emotion that comes in when you buy when you shouldn't buy, when you sell when you shouldn't sell, this takes that out, and that's why a preferred trader will be like this. One of our traders will be doing this. They'll be 10 times more profitable than anyone else out there because of these techniques. These techniques are taught in the webinar this weekend, plus stuff we don't even teach in the research center or the chat room. Some of our time count values, our cycle values, you name it. That stuff we don't even teach in our chat room or research center. But the research center goes over these trend line analysis. We talk about all different types of patterns, prices, times, and everything across the board. And we do encourage you all to come and join. Plus, the chat room is always a great avenue. I mean, we just do live commentary all day long in the chat room. It's really fantastic. Now, just again, guys, the sell-off here coincided, obviously, with this resistance area right here, but it's important to understand what else was going on here. GM came out and basically said they're not going to make one of their payments. All right. Now, essentially, it wasn't due for a month, but the fact that they're saying that means that they're pretty much folding. I mean, they're saying we're not going to pay it. We'll tell you now, and that's what really is going on. So, interestingly enough, first of all, note, you didn't even need to know the news. Yes, the news of the GM was a little bit of a drop here in the market. Was the market overbought? Absolutely. But notice the resistance line. The market, no one knew. You know, if you have these lines in your charts, which they are easy to find, you know, you didn't even need to know. You just went short at this resistance area, and, oh, look at that. All of a sudden, you start crashing the market. And now, again, notice this pattern. Big down move, sideways, possible bearish in spirit of bear flag formation. Now, again, we'll have to follow this. You're going to have resistance right here at 85.50, which will be right into this yellow line. Right above that, the 20 moving average at about 85.65. If you break through that, then you'll actually have a pivot point right here, which is a new line we need to add in. And again, note that pivot point, that's about 85.90, and then ultimately here at 86.10. Would be your double top for the day. Those are your levels on the upside. Downside, you're going to have the 200 moving average in this kind of turquoise-ish, bluish trend line at 85.15. If you break that, you're going right to the 50 moving average here at 84.95. Then the beige trend line here, the brownish trend line at 84.65, and so forth, all the way down to the lows of the day. This is how you're setting yourself up. You want to be able to short resistance, buy support. You want to notice pattern, price, time, technical trend line analysis. Give yourself the ability to see the future before it happens. Take to tomorrow's newspaper today, and you'll be able to profit. It's that simple, folks. I mean, it's just a matter of that. So I do encourage you, come join the webinar. Again, Saturday, 1 p.m. Eastern Time. You can find all the information on the website. Go under the link on our website, Education Seminars and Webinars, and you'll be able to find that stuff, folks. And also look into joining the Research Center. We'd love to have you. We think it's going to be it is a fantastic learning environment and guidance environment as we're talking about trades that we do, what we think about the market over the next couple days, just giving you all the avenues to be able to become a more proficient, profitable trader. Take care, folks. We'll talk to you tomorrow.